Hi and welcome to another edition of TraderCast's daily market report. I'll try something different today. I'll try and cover as many instruments that I can possibly do in a very short time. So one video will possibly cover multiple instruments. We are starting with the DAX or German 30. This is the hourly time frame, so nothing changed much from yesterday. As we said, holidays and low volumes, we are still creeping up higher with a logical support at 93.22, followed by 92.75 and 92.35. A loss of 92.35 would potentially change this bullish outlook shorter term, potentially targeting further downside towards 9,150. Pullback into any of these levels, especially 93.22, 92.75, and a swift bounce off that level would confirm the continuation of this uptrend. So logical take profit levels or resistances are at 94.44, 94.68, so 94.50 area. Only a successful breakthrough above that could potentially target 95 or even 95.20. This is the chart of FTSE in 1 hourly time frame. We can see that it's still continuing with this upward channeling trading range, currently supported by 20 and 50 period moving averages and also this rising trend line. The initial support is at 66.19. Only a loss of that support and a closure below could potentially target 66 even, and potentially that could change the outlook of this current upward move. Alternatively, if that pullback happens and then the buyers return, or maybe a breakout happens from the current levels, then a very important upside resistance is at 66.40, which is our longer term daily 200 moving average, and only a push above that level, possibly a retest of that level as a newly found support, can potentially target further upside, maybe targeting this rising resistance trend line around 6,700 and potentially 6,730, which will be full 76.8 fib retracement in a daily time frame. What we are seeing currently is hourly time frame for gold. Nothing changed there as well. Actually, the creation of first higher low, it's still intact after the initial pullback and the rejection of 1180. So current support is 1158, 1157, which is a cluster of these two 20 and 50 period moving averages in an hourly. A loss of that level could potentially target 1155 and then 1146. Only a loss of 1146 could potentially target 1137 and 1135 as a logical downside support. Alternatively, pullback into these levels and a swift move higher will be initially capped by 1168, 1170, 1180. Only a break above 1180 could potentially target 1192. This needs time for play out, but a fairly important resistance at 1180. This is a chart of US crude December contract, and what we are seeing currently is the oversold bounce back after the initial rejection of this 80 area as a logical take profit area for anybody who is long, and also anybody who is looking for a short as a continuation of this longer term daily time frame. So the current support is around 77.50, which is the current level. Pullback into 76.56 would offer some level of support, which is referring to these two previous lows. Only a loss of 76.56 could potentially target 75.87, and loss of that level could potentially target as low as 74.11. As long as we stay above the current lows and above 76.50 and move swiftly higher, then logical upside resistance is located here, this rising previous support trend line, and also this 200 period moving average in an hourly. So 78.75, 78.50 would offer some logical level of resistance on the upside. Only a breakthrough above here and an hourly close above that level could potentially target further upside towards 80, maybe 80.50. The last chart that we are going to look at is euro dollar in an hourly time frame. We can see that there is a creation of lower highs, but we are seeing oversold bounce back. So this is a first higher low, and the massive resistance is located here with this falling resistance trend line and also falling 200 period moving average, and the level that we tagged in the past on a number of occasions at 25 even 12500. A breakthrough and an hourly close above that level could potentially target further upside based on this fib retracements from swing high to swing low towards 2564, 2613, 2683, and that will be a really full retracement in this clearly defined downtrend. Alternatively, rejection of these levels and a swift move lower towards 2445, 2450 area, which is a cluster of these two moving averages, would offer some level of support. A closure, an hourly closure below that level could potentially target 2395 followed by 2360.